Welcome back. Now, credit card use is no longer reserved for emergencies. There's a trend in rising demand for credit as consumers start using credit cards for daily transactions. Standard Bank notes a 43% year-on-year increase in new credit card uptake. And while this shift from debit card to credit card use raises eyebrows about financial health, the lender highlights it as an indication that consumers are becoming financially savvy. Tumelo Ramugondo, head of credit card at Standard Bank, joins us with greater perspective on this. Tumelo, thanks so much for your time this afternoon. So after, reading that press release, am I correct in saying that this is not a cause of concern? It's not something to worry about?
Good afternoon to you and your viewers. I think definitely you've got it right. There's no real cause for concern at this point in time, because I think what we're really saying is more a shift in behavior for consumers because of the bigger benefits that you tend to get when you use your credit card over your check account, as opposed to sort of reckless spending from consumers. So overall, you're not really seeing a shift in overall consumer spend, other than the fact that they're actually pulling out a different plastic to actually make for their payment. So that, I think, is actually a good news story for consumers, because they're actually leveraging the benefits that they're actually getting with this credit card product.
And Tumelo, what does the pay rate look like? Are people paying back, on time, or are people defaulting?
So I think it's always a combination. At this point in time, I mean, we still have a big number of majority of customers actually paying back for their credit cards, and most of them actually paying back at the time that they'd actually sort of committed to.
Okay.
So there hasn't been any, let me call it, recent concerns around credit card payments, especially with us, I think, having come out of COVID. Sort of seeing, for example, the recent sort of interest rate cuts, and you're starting to see some of that starting to flow into sort of the consumers' sort of disposable income. So there hasn't really been recent, I think, trends for concerns from a payment perspective. So I think customers are paying back. And obviously there is those odd ones that are struggling, and those we always try and encourage them to sort of make formal arrangement with the bank, so that we can actually help them through the difficult times that they're going through.
Tumelo, you spoke about a shift in behavior here. Just talk to me about, some of the goods that households and consumers are using these credit cards for.
Yeah. So I think the trend that we're noticing is that credit card is actually becoming a daily spend card, and to your point, as opposed to sort of an emergency card. And what you're then seeing is actually consumers are starting to spend on things like groceries, which is almost something that they do more frequently. Customers are actually starting to use their credit cards to actually buy for clothing, and actually even for takeouts. So if you look at restaurants, as well as sort of fast foods, you actually see that actually prevalent, as well as paying for their fuel on a day-to-day basis. So pretty much all the items, I think, that you can classify as day-to-day items, we're actually seeing a credit card also becoming a dominant part of the customers' sort of payment options in that space.
And it's interesting to see what's taking place. I spoke to another analyst probably around 2-3 weeks ago around the higher use of credit cards around the holiday period. And that was rather on the back of, consumers and households perhaps spending more than they have, and then opting to use their credit cards during those holiday seasons, because then you are making those purchases. So it is really interesting to see how the different sort of data points are, stacked up against each other. Because on one hand, we do have a consumer that, has seen some relief come through. You mentioned interest rate cuts. We've seen lower inflation. We've seen, those two-part withdrawals coming through. But we can't deny that the consumer still is under pressure.
Yeah, so maybe just 2 points there. One, I mean, to just agree with your last point, we definitely cannot deny that consumer is still under pressure. I think the relief that we've seen so far, I think, is welcome, but doesn't necessarily go far enough to really make sure that I think the consumers have got a good enough disposable income to then spend on other things.
Yeah.
But there is still a bit of relief that comes through there. But maybe just one point around holidays generally is one of the things that you must just keep in mind when it comes to holidays is when it comes to things, for example, like your hotels, your
Yeah.
car rentals, etc., etc. Those entities generally want to reserve some funds in your account that you're not necessarily spending in case, for example, you get an accident with your car. For hotels, in case you spend or you eat up some stuff in the hotel, etc., etc. And consumers also generally don't have that kind of money that are necessarily required to reserve those type of services. And credit card then becomes a very good option to use in that instance because only post the trip, for example, those service providers will then refund you for all those deposits that you actually pay upfront. So there is also that element that comes through once you start talking about credit, about the travel season, where it's not necessarily directly spent, but it's actually also the deposits that consumers need to pay for to facilitate spend. And as a result, because customers don't generally want to impact their spend capability for that holiday, they would then normally default to credit cards to actually reserve all those deposits as well.
Tumelo, quickly, just before I let you go, how would you rate then the state of the South African consumer at this point in time?
So my sense is it's improving. It's definitely nowhere close to I think what we saw pre-COVID levels. So the consumer is still I would say under pressure. Yes, inflation is coming down. Yes, interest rates have to some extent come down, but I don't think we've actually gone enough to a point where we can actually say the consumer is actually in a good state or a healthy state. And I do think, hopefully, in the coming months, depending on what happens with the economy and the interest rate, we can finally get to a point where we're actually quite comfortable with the state of the consumer. But at this point in time, consumers, you can see, even with their spend patterns, they're still spending mostly on essentials. They're not really going for a lot of luxury. You are seeing quite big improvement on the luxury side, as well as, for example, travel, which were some of the sort of the sectors that were actually struggled in the last couple of years. But I don't think we're at a point where we can actually say we're out of the woods yet.
All right, thanks so much. We have to leave it there. That was Tumelo Ramugondo, head of credit card at Standard Bank.